Good morning everyone. We were going to discuss on audit procedures and audit evidences. Audit procedures is the method and technique used by the auditors to obtain the evidence.
Did you know what are the terms used in audit procedures?
These are the terms used in audit procedure. The first one is inspection. It involves having the audit staff examining records, documents or tangible items. Second is inquiry and information, seeking information and getting information from both inside and outside of the company. Third, recalculation and reperformance. This is to check the accuracy of the items and various documents. Fourth, analytical procedures. Identifying and investigating unusual fluctuation and items, especially in the bank statement and income statement. Lastly, observation. Observing client staff performing a process in relation to area of audit concern.
A test of control is an audit procedure to test the effectiveness of a control used by a client entity to prevent or detect material misstatements. There are three categories. Test of control. 1. Reperformance. Auditors may initiate a new transaction to see which controls are used by the client and the effectiveness of those controls. 2. Observation. Auditors may observe a business process in action, and in particular the control elements of the process. And 3. Inspection. Auditors may examine business documents for approval, signature or review check marks, which indicate that controls have been performed.
Okay, now it's time to explain on substantive procedures. Please pay attention. Substantive procedures provide evidence about the existence in misstatement or fraud in account balance.
Substantive procedures also divided into three categories.
Number 1 is analytical procedures. Complement the substantive test of transaction and account balances. Enable the auditors to detect out-of-line condition and unusual fluctuations. Study of relationships and comparisons between data.
Help the auditor in reducing detection risk for specific FR assertions.
Next is test of details of transaction where no money error occurring in the account. For example, capital expenditure is wrongly recorded in revenue expenditure. Lastly is test of details of account balances and disclosures to detect monetary error normally applied to financial statement. There are several types of the test. Now, let's move on. Audit evidence.
Audit evidence is the evidence obtained during financial audit.
These are the three sources of audit evidence.
Audit evidence is important to ensure that the client's management is honestly recording the business transactions. Also protecting investors from inaccurate and biased audit report.
Sufficient appropriate audit evidence sufficiency means that the measure quantity of audit evidence obtained. The number of evidence obtained must be completed to be used and considered by the auditor. Appropriateness defined as the measure quality of audit evidence appropriate relate to the relevance and reliability of the information. Persuasive audit evidence. Auditors prefer to reasonable in their services than absolute. It is typically persuasive rather than conclusive. The persuasive evidence collected using sufficiency and appropriateness.
Let's proceed on the last part of audit evidence, which is the types of audit evidence. These are the 7 types of audit evidence. Number 1 is physical examination. It is inspection by the auditor of client's tangible asset. Next is observation. Observation is involve auditor watching the activity of counting the cash, and the auditor will compare with client's cash record. The third one is documentation. There are 2 types of documentation, which are internal and external. Besides, confirmation of client. Obtaining confirmation from independent third parties, verification in writing of the accuracy some information. Next is an inquiries of client. It is to obtain information from the client and response to the question. Analytical procedures. It is overall overview of financial statement at the end of audit processes. Lastly, reperformance. It is the independent tests of client accounting procedure that were originally done as part of the entity's accounting and internal control system.
That's all for today.